family. We're going to do a 20-question life insurance quiz, basically on the provisions, index universal life insurance, and annuities. Most of the test questions on the test are going to be in those three different subject areas: provisions, index universal life insurance policies, and annuities. All right, let's jump into it. Jonathan, take us away.
Which non-forfeiture option provides the highest death benefit? Extended term.
Yes, sir. Jonathan, you know, yes, congrats, you're exactly right. Extended term.
Okay.
All right. Number 2.
Me?
Yeah, we can't hear it. The rest of we can't hear you, so just you.
Okay. Which non-forfeiture option allows the policy owner to receive the policy's cash value? Receive the policy's cash value. I'm gonna say dividend accumulation.
No.
Cash surrender.
Yep, it's cash surrender. C.
I was gonna say that first.
Right. So let's say the non-forfeiture option, the acronym is either SIR or SIR, which is cash surrender, extended term, and reduced paid up, CER, or it's REC. You can do it the opposite: reduced paid up, extended term, or cash surrender. There's only 3 of them. So when that question said non-forfeiture option, you got to be one. You got to be A, B, or C. Cash surrender. They just basically want to make sure that you know that you can get the cash out and the policy terminates and can't be reinstated. The question we just answered, number 1, on extended term, you just got to know what you know, that it gives you the most coverage for a temporary period, and then reduced paid up gives you less coverage for the longest period. So there's always that's basically any version of what I just said is going to be the right answer on a non-forfeiture option question. All right, next.
Extended term insurance converts the policy into whole life with lower premium.
Nope. If you ever see the word in the question, and that's one of the answers, that's the answer.
Okay. Word in the question. Term insurance for original face amount.
Yes, sir. Every time. Term insurance, so the extended term option gives you the most coverage, which is actually the most coverage is the same amount of coverage that you had before for a temporary period or term insurance. But term insurance, that's like I said, if you see the word in the question and that same word is one of the answer choices, that's always it. You ain't got to think about it.
Got it.
Next.
Reduced paid up insurance provides. Man. Reduced face amount with no premiums.
That's it. Rolling. Herc, how did you know it was no premiums?
I look for the word in the question. I didn't actually understand the theory behind it, but I looked for the word in the question.
Oh, wait, it worked, didn't it?
It worked.
Right. The theory behind it, though, it says with no premiums, paid up insurance mean it's paid for life. You don't have to pay anything. So, but that works. All right, 5.
Which dividend option allows interest to be earned or retained? Accumulation at interest.
That's exactly right. Once again, what you what did you do? See the so
Well, I saw the word in the question, but I had a little background in studying some of this, so it kind of it I process of elimination. Let's just go there.
yes, and that little memory trick, answer trick, the word in the question works like clockwork with this insurance.
All right.
All right. Moena, can you hear us?
Yes, I can.
All right. You pick us up right here, number 6.
Which dividend option increases both debt benefit and cash value? Um, Paid up additions.
That's right.
Can
And-
you explain that?
right. Well, the question says which dividend option increases, which would give you more
Mm-hmm.
insurance or give you additional insurance. So the answer is B, paid up additions. So basically, it's just word association in this case. So if it says dividend option increases, that's the only option on here that has anything to do with getting additional insurance. Accumulation, that's not even a term unless, accumulation is not. It's just something they threw in there as a distractor.
Okay.
Yep. So cash would be a cash to rent. Cash is a dividend option. Paid up addition is a dividend option. 1 year term is a dividend option. But accumulation is just a distractor. So if you can just use your process of elimination, even if you don't understand the concept totally, you're
Mm-hmm.
gonna be in good shape just with basic word association and the vocabulary.
Okay.
All right. Next.
Which dividend option is used to purchase term insurance for 1 year term?
That's it.
Okay.
Next.
Which settlement option guarantees payments for the life of the beneficiary? Um, Guarantees payments. Um, I would say
Hold on before you say it. Don't overthink it. What have we been using? What little word association trick have we been using all along?
uh life connects with life. I'm not sure.
That's exactly right. Yeah, yeah, yeah. That's it.
Okay, so I would say C, life income.
Is that what you were gonna say before I jumped in?
Yeah.
Okay, perfect. I just didn't want you to overthink it and pick the wrong one because it said if life is in the question, then life is gonna be the answer. Then just go on to the next one.
Okay. Yeah.
Now, on this quiz, I used 3 different provisions. The first one was non-forfeiture options. The second one was dividend options. And now we're talking about settlement options. You do need to know what those 3 provisions are. A non-forfeiture option was the first, 2 or 3 questions. Basically, if you are canceling a whole life policy, but you don't want to forfeit or lose the cash value you've accumulated, that's called a non-forfeiture option. So that's your options with the cash value to keep from losing it. Number 2, we talked about dividend options. Participating whole life policies pay a dividend. So when the insurance company gonna send you a check, they give you 5 options on what you can do with that dividend. It's CRAPO or CARPO, CRAPO, cash, accumulated interest, reduction of premium, paid up additions, 1 year term. So, but all of this is on my in video. You just gotta get familiar with it. All right. Next question.
Okay. You have to do the next question.
Uh oh, There you go.
Thank you. Where settlement option pays for a specific number of years. Settlement option pays for a specific fixed period. Fixed period C.
That's right. Yep, that's it.
Okay.
And the third provision, so we said settlement, non-forfeiture options, dividend options, and now we're talking about settlement options. Settlement options is when the primary insured, or it doesn't matter, it could be the primary or the spouse, where the insured actually passes away and the insurance company is going to pay the claim or they're going to settle the claim. So when they settle a claim, they're going to pay the face amount of the policy. The client actually has 5 different ways they can get the money from the insurance company. The acronym is CLIFF, CLIFF, cash, life income, interest only, fixed period, fixed amount. And this answer obviously was fixed period. All right, Weena, one more.
Okay. Under which settlement option does the insurer only pay interest? I would say B, interest only. Yeah.
All right, 10, interest only. I mean, that's like almost too easy when you see the word in the question. What do you think?
Yeah, honestly, these questions are a lot easier than they were on the test that I took.
They're a way lot easier.
Yeah.
Okay, well, I specifically made this quiz simple. We can use different test techniques where we can use examples where it could be John and Mary was married, John died, Mary got $100,000. She wanted to get income for life. Which option works better? That would be, you can be a little challenging. Then we can make it a next level up, could be all of these are right except, or all, so we can do some of those. And the next level of difficulty is all these are true, one, one only, 1 and 3, 3 only, or 4 and 2. So, but this one right here, I mean, honestly, is going to be relatively simple. But keep coming back. I'll give you some hard ones. All right. Justin, you there?
So 11 says an annuity that begins payments immediately is called an immediate annuity.
Mhm. All right. And also, too, with the explanation, if you know the like the 3 provisions, non-forfeiture options, dividend and settlement, noted IULs, even if the test, even if it's worded a little differently, more challenging based upon a real life scenario or a different style of question, uh, I think you got a good shot at getting it right if you familiar with it. Anyway, all right, Justin, go ahead, number 12.
Which annuity accumulates funds before payouts begin? And before the payout. So fixed annuity?
Nope.
Um, so it's got to be B or D. I don't know which one it is though.
Okay. Straight life annuity. A life annuity pays an income for the life of the annuitant, and it pays the highest monthly check.
Okay.
So whenever you see straight life, the question is going to be the highest monthly income. So I use the analogy on the video: big check, no Benny. Big check, no Benny. Straight life gives you big check, meaning the largest check with no beneficiary.
So it
Uh,
would be deferred.
it would be deferred. There's
Okay.
only annuities are categorized several different ways, but one way they categorize them is when the payout begins. So, because you got fixed annuities, you got variable annuities, you got different payout options. But one way they are categorized is based upon when the payout begins, and those annuities are either immediate or deferred. An immediate annuity is if the annuitant starts withdrawing the money within 12 months. A deferred annuity is going to start taking the money out over 12 months. So if the question said, John and Mary, John has got an annuity, he bought it in January of 26, he's planning on taking an income in June of 26, then that's an immediate annuity. If John has an annuity he takes out in January 26, and he's not going to start taking an income until March of 27, that's a deferred annuity. Got it?
Yes, sir.
Got it?
Got it.
Okay. Easy peasy, lemon squeezy. All right, Justin, two more.
All right. Which annuity type guarantees a minimum rate of return? And I would say fixed.
That's it. That's it. It would be fixed. How do you know it's fixed?
Because it says guarantees a minimum rate of return. So that's kind of what gave it away for me.
Well, you're exactly right. Guarantees minimum rate of return, but the one word is just guarantee. When you saw the
Yes,
word
sir.
guarantee, then the answer would be fixed.
Yes,
Like
sir.
if they had given you the same question and just said which of annuity gives you a guaranteed return, then the answer still gonna be fixed. So guarantee is the key word. All right, next.
Variable annuities are regulated by variable annuities are regulated by SEC, and FINRA.
Yep. Now this question is a little tricky because variable annuities are regulated by the SEC and FINRA. Because when you saw the word variable, you get that word association that goes with that is stock market. And the stock market is obviously regulated. The governing body is the Securities Exchange Commission and FINRA, Financial Industry, something regulation or something authority. So SEC and FINRA governs the securities industry. But the reason why this question would be a little tricky, and the people that when I made this up, it's a little inaccurate, is because variable annuities are regulated by the SEC and FINRA and the insurance department. So it's both. An annuity is an insurance product. So if you see it, you can see it if you see it again on the test, if it says SEC, FINRA, and the insurance department, that's going to be a more accurate answer. Got it? All right, Justin, one more actually.
Hey, can you come back to me real quick?
Yeah, sure. Jonathan, you ready?
Yes, that's fine. I'm ready.
All right, pick us up right there.
Which feature is unique to universal life insurance? C, flexible premiums and adjustable death benefit.
That's exactly right. If you ever look, universal life insurance is just like the marketing term, but the insurance policy on the actual policy, it is a flexible premium, adjustable life or an adjustable death benefit product. Like that's exactly what the product is. So what feature is unique? Well, yeah, I guess it is unique because that's that's the only policy that is that. Anyway, all right, just Jonathan, one more.
Universal life policies separate which components? A, premium and tax.
Nope.
I'm going to say then dividends and interest.
Nope.
Okay, well then I am guessing now. Uh, insurance and investment.
Right, insurance and investment.
All right.
Mhm. So let's say on a universal life insurance policy, flexible premium adjustable life, uh, yeah, that doesn't really say it in that name. But insurance, a universal life product basically has two features. It has a death benefit and or mortality charge as annual renewable that goes up every year. And it has a cash value or savings account. It could be a fixed, fixed cash account. It could be an index. That's why I index universal life insurance policies, because the cash value is linked to an index. It could be a variable universal life insurance policy where the cash value is invested in the stock market. But it's going to be two different things, insurance and investments. So that's really kind of deceptive, because the word investment implies it's always an investment, and it's not necessarily, because just a regular universal life insurance policy, the money is not actually invested. So that could be a little bit tricky. But insurance and a cash account, which could be invested. All right, almost done. Moena, pick us up right there.
Deficient premiums are paid in universal policy. What may happen? Sufficient premium. The policy lapses.
Absolutely, the policy lapses. Yes. All right, next.
Sold anything yet.
Hello?
Yeah. Read it. Can you read 18?
No.
Hello?
No, I can't. I only see 17.
Jonathan, can you see 18?
Yes.
All right, read that for me, young man, please, sir.
Which non-forfeiture option continues coverage the longest? I'm going to say extended term.
Nope.
Hmm. Okay, we'll go with reduced paid up.
Yes, that's correct.
Okay.
You want to try to explain why?
I don't know if I can explain why. I knew it was probably B. I knew it wasn't cash surrender. Uh,
Mm-hmm.
so it B or D, and um, I went with B. So that's what I did.
Okay. Well, it's one of those first three, C, R, C, sir, cash surrender, extended term, reduced paid up, or REC. However you say it, them three initials go together. Reduced paid up gives you insurance paid up or for life. Gives you less coverage for life. That paid up, that's how you know it's the longest coverage, because it's for life. All right, Justin, read these last two and we out of here.
Okay. Which settlement option risks the beneficiary outliving the payments? Joint and survivor.
Nope.
Then it would be the fixed amount.
Exactly. That's right. You want to explain why?
So since it's a fixed amount, the person could outlive the payments when the payments run out, since there's a certain number.
Exactly. It's either going to be fixed period or
Hey.
fixed amount.
I have to leave my number. Is my
Yeah.
Speak to me again.
Yes, that's fine.
And
Okay.
in case something happens.
Yes, ma'am.
You could just call me, please.
All right, no problem.
Thank you.
Of course.
Okay.
I could do the next one.
Okay, that's good. But let me explain that a little more. Fixed period and fixed amount. Fixed period is gonna pay for 20 years or 30 years, whatever the period. Fixed amount is gonna pay out that dollar amount till the money runs out. Got it? Now, out of those four choices, fixed amount is the only one because once the money runs out, then it's gonna obviously you outlived it. All right, last one, number 20.
Which annuity I got it in my system. No problem. Which annuity payout option continues payments to a second person after the first dies? And that's joint and survivor.
That's exactly right, because it pays two people. All right, family. See how simple that was? 20 questions, learn the terms, and absolutely positively, just through repetition. In my opinion, repetition is undefeated.
Yeah.
Everybody's not going to learn the material at the same pace, but if you see it enough, you'll be able to pick it out on any of these standardized life insurance exams in any state in the country. All right, hope that helps you. Y'all enjoy the rest of y'all evening.
All right. Thank you.
Thanks.